Hello, everyone, and welcome back to Gold Off the Charts. A bit of deep financial thinking every day to help you see further and walk more steadily on your journey toward wealth. In today's video, we're recording with a real sense of witnessing history and maybe even a little awe. Why? Because in the last 24 hours, we have witnessed one of the craziest, most unbelievable, and frankly absurd scenes in financial history. If you were watching the charts yesterday, your heart was definitely racing. Spot gold looked like an ancient beast breaking its chains. It ignored gravity, ignored overbought indicators, and completely steamrolled the bears as it surged higher. Early in the session, gold hit a staggering high of $4,690.85 per ounce. Think about that for a second. That's not just a new all-time high, it's a massive $94 jump in a single day. This isn't just your typical rally or a simple inflation trade. This is pure panic, greed, and a massive vote of no confidence in global capital during an era of extreme chaos. The spark that set this off sounds like a bad Hollywood script, but it's actually happening. Our old friend, President Donald Trump, just gave gold an epic nuclear-grade boost over the weekend. You've likely seen the news. Trump's pursuit of Greenland has led him to switch to maximum pressure mode against his closest European allies. He announced that starting February 1st, he'll slap tariffs on 8 European nations until the U.S. successfully acquires Greenland. It sounds like a hostile takeover by a real estate developer, doesn't it? But this is diplomatic bullying at a national level, and it has absolutely blown up the European powder keg. Those 8 countries fired back with a joint statement, and French President Emmanuel Macron took it a step further, vowing the toughest trade countermeasures the EU has to offer. There are even reports that several EU nations are considering tariffs on $930 billion worth of U.S. goods, and rumors are circulating that Canada might even send troops to Greenland. Just stop and think about what that means. This isn't just a trade spat. It's the collapse of the Western alliance system built after World War II. The relationship between the U.S. and its long-term European allies has hit a historic breaking point. When the U.S. starts trying to buy its allies' territory and uses tariffs as weapons, the underlying logic of the world has changed. For gold, this accelerating global turmoil is like pouring gasoline on a fire. It's reinforcing the global consensus that we are in a massive gold bull market. In a world where trust is gone and rules are collapsing, gold becomes the only and final safe haven. So, today's theme is simple. Does today's gap up signal the start of a major main rising wave? With so many positive factors aligning, could gold actually hit $6,000 a target once thought to be a fantasy? Meanwhile, silver is following gold to new highs. However, there are some red flags behind the scenes suggesting big money might be quietly exiting. What's next for silver? Today, I'm using this deep dive video to connect all the dots from the Greenland drama and the power struggle at the Fed to the subtle shifts in the silver industry. First, let's look at the biggest driver of gold right now, the civil war within the Western world over Greenland. Some might ask, is buying an island really that big of a deal? Is Trump just bluffing? Well, this time is different because it strikes at the heart of European sovereignty and dignity. This isn't just business. It's a political red line. Look at the specifics. Trump's threat is precise. Action against 8 European countries starts on February 1st, just days away. Even Treasury Secretary Scott Bessent joined in, saying something quite insulting. Europe is too weak to guarantee its own security. He claimed the tariffs were necessary to prevent a national emergency in the U.S. This is essentially a slap in the face to Europe, which prides itself as a center of civilization. Let's look at the perspective of Jakob Fink Kierkegaard, a senior fellow at the authoritative Bruegel Institute. His analysis is sharp and pulls no punches. He notes that Trump's new tariff move effectively kills the 15% tariff deal reached in Turnberry, Scotland, just last year. What does that mean? It means the fragile trade peace we had is dead. The Turnberry Agreement is at risk, and the U.S. and Europe are heading toward a full-scale trade war. In Kierkegaard's view, Europe faces a hellish dilemma. Fight back in a trade war, which will hurt, but save their dignity, or face the risk of a serious military conflict. This isn't just fear-mongering. Look at the reaction from Danish Prime Minister Mette Frederiksen. After Trump's threat surfaced, she held emergency calls with German Chancellor Friedrich Merz, President Macron, and UK Prime Minister Keir Starmer. She publicly stated on social media that she refuses to give in to this blackmail, emphasizing that Denmark has massive international support. She said something that resonated across the continent. Europe will not succumb to blackmail. That's a heavy statement. It marks the awakening of Europe. Shortly after, Denmark, Finland, France, Germany, the Netherlands, Norway, Sweden, and the UK issued a rare joint statement. They made it clear that these tariffs would destroy transatlantic relations and trigger a dangerous downward spiral. They even clarified that the Arctic Endurance military exercises Trump complained about were routine and not a threat. But with Trump, does being reasonable actually work? What's even more alarming is the EU's actual response. According to the Financial Times, many EU countries are prepping a Plan B to counter Trump. These options include tariffs on $930 billion of U.S. exports or restricting U.S. companies from the EU market. That is a trade nuclear war scale of retaliation. Some in the European Parliament are calling for the anti-coercion instrument, often called the EU's economic nuclear weapon. It allows the EU to strike back instantly without waiting for the UN or WTO, using punitive tariffs, market blocks, or even suspending patent licenses. Valerie Hayer, a key figure in the EU Parliament, warned, if the US treats Europe as a weak target, it will reap the consequences. Do you see the shift? This isn't just about money anymore, it's a fight for survival. This is the biggest rift in US-Europe relations since the Marshall Plan. It's a total breakdown of the transatlantic alliance. When the world's two biggest developed economies go to war, where does safe haven money go? Is the dollar still safe? Is the euro? The answer is obvious. Capital will flow to the oldest asset that doesn't depend on any government's credit: gold. That's why this Greenland crisis is a massive catalyst. As long as this conflict exists, the floor for gold prices will keep rising. The logic is rock solid. Now, let's look inside the U.S. The second fire pushing gold higher this week is the battle for the next Fed chair and the fight over the central bank's independence. You might ask, if de-dollarization is happening, why do we still care about the Fed? Here's the deal. Even if the dollar is losing ground, it's still the world's primary currency, and the Fed is still the world's central bank. The next Fed chair decides the path of interest rates and the dollar's strength. As traders, we can't ignore this game of musical chairs. We've reached a showdown moment. This Game of Thrones-style battle is more intense than any episode of House of Cards. The investigation into Chairman Powell has sparked a massive political backlash. Prosecutors recently subpoenaed Powell over renovation costs at the Fed building. It's clearly a move to find dirt. Powell has fought back, calling it a blatant attempt to undermine the Fed's independence. Now, the White House is trying to find a way to de-escalate. Kevin Hassett, Trump's economic advisor, tried to play it down as a simple request for information. Treasury Secretary Bessent hinted that if the prosecutors get satisfactory answers, they can move on. The logic is, Trump wants Powell out, but he can't destroy the Fed's reputation entirely, or his next pick will be under a cloud of legal threats. More importantly, this Wednesday, the Supreme Court hears a case involving Fed Governor Lisa Cook. This is a life-or-death moment for the Federal Reserve. If the court rules the president can fire Fed officials over things like mortgage fraud, it means the president can essentially remove anyone who doesn't obey. Fed independence would be dead. Amid this chaos, the market is betting on who the next chair will be. Kevin Hassett, once the frontrunner, seems to be losing ground because he's seen too much as a Trump mouthpiece. Trump even said on Friday, "I want to keep you as my White House advisor," which is essentially a polite no for the Fed job. Now, it looks like the job might go to former Fed Governor Kevin Warsh. What does that mean for gold? Warsh is seen as competent and relatively independent, which might stabilize the markets in the short term. However, anyone in that chair will be under immense pressure from Trump to cut rates to near zero. Look at the data. U.S. GDP grew 4.3% in Q3. In a normal economy, you wouldn't be slashing rates with growth that strong. But if the Fed is forced to cut rates to please the president, we get one result: runaway inflation. That's the nightmare scenario for the market. If investors believe the Fed has stopped fighting inflation, bond yields will spike and real interest rates will tank. That is a massive, long-term win for gold. This Wednesday, Trump speaks at Davos. Secretary Bessent expects a decision on the Fed chair around that time. This is a major tipping point. This power struggle is weakening the dollar's credibility and fueling gold's rally. Finally, we can't ignore the third fire coming from the East, Japan. I've mentioned before that the yen's volatility could trigger a global capital reshuffle. This week, the Bank of Japan meets. Most expect them to hold rates, but there's a huge wild card. Prime Minister Sane Takaichi might call a snap election. She is a known economic nationalist. An election would bring massive political uncertainty to the yen. Why is this good for gold? Because the yen is the backbone of the carry trade. If the yen swings wildly or the BOJ tightens, huge amounts of global capital will look for a new home. When investors who are safely earning interest find the yen too risky, where do they go? In these turbulent times, there's no better home than gold. So, yen volatility remains a major potential buyer for gold. After looking at the macro side, let's see what the smart money is doing. The numbers are clear. The SPDR Gold Trust, the world's largest gold ETF, is seeing rapid inflows. Institutional money is pouring in. They are buying, holding, and locking away their positions. The CFTC report shows the same. Investors are aggressively increasing their net long positions. As of January 13th, speculators added over 12,000 contracts on the COMEX. The total is now over 136,000. This shows a powerful bullish consensus. Both big banks and speculators are betting on higher prices. Between the US, Europe rift, the threat to Fed independence, and Japanese yen volatility, I can tell you gold has likely started a major run towards $6,000. This isn't just a short-term pump. It's a historic surge. Every dip right now might be the last chance to get on board. Now, after talking about the golden age, we need to look at silver. Silver has been riding gold's coattails, nearly hitting $94 per ounce recently. It jumped 4% in a single day. Many are shouting that silver is going to 100, but as a market veteran, I have to warn you, beneath the hype, there are some very concerning signals. Signal number 1, smart money is leaving. Latest government data shows that hedge funds and big institutions actually cut their silver long positions by 15% last week. That's a 22-month low! This is a dangerous divergence. The price is hitting new highs, but the big players are selling. This means pros are worried about the high price and are quietly dumping their positions to retail traders who are caught up in the FOMC. It also shows they are losing faith in the tariff hype that was supposed to cause a silver shortage. When the smart money runs, you should pay attention. Signal number 2, the collapse of industrial demand. Unlike gold, silver is an industrial metal, especially for solar panels. But high prices are killing demand. Solar giants like Longi and Jinko Solar have openly stated they are looking for alternatives to silver like copper. This destroys the long-term supply-demand story for silver. If companies stop using silver because it's too expensive, the rally loses its legs. This raises serious fears about shrinking demand. Once that pillar collapses, silver can't stay this high on just safe haven status alone. My advice, be very cautious with silver in the short term. It might follow gold up, but it will be much more volatile and much less certain if the market pulls back. Silver could crash hard. If you're buying here, be prepared for wild swings. Lower your expectations and avoid high leverage. Balance your portfolio. Don't put everything into silver, especially at these highs. Use gold as your defense. And treat silver as a small, aggressive offense. To wrap up, we are at a once-in-a-century turning point. The Greenland dispute isn't just about land, it's the beginning of the end for the old Western order. The Fed battle isn't just about a new boss. It's the end of dollar credibility. In this era of chaos and uncertainty, gold's fundamental case has never been stronger. It's not just an investment anymore, it's a wealth guardian. We are likely witnessing the moment gold charges towards $6,000. Of course, the market isn't a straight line. There will be bumps, washouts, and violent swings, like we see in silver. So let me remind you once more. This analysis is based on my observations of the news and market logic to help you organize your own thoughts. My goal is to help you see through the fog. This is not direct trading advice. Every trader's risk tolerance is different. Make your own decisions. Managing your position size and risk is the #1 rule of survival. That's it for today. I hope this deep dive helps you see the road ahead clearly. If you found this helpful, please like and share the video. Leave a comment below with your thoughts. I'd love to hear them. 2026 is the year of hard assets. Let's hold on to our positions, join the movement to tackle the market together, and watch our wealth grow. This is Gold Off the Chart. See you in the next one.